Hi there, folks. This is a trade I took this morning during the NY Open session. As you can see, it is the QE dollar, and we are looking at the daily chart. I'll try my best to walk you guys through the reasoning, the whole reasoning behind this trade, and try to be as specific and objective as possible. I'll ask you guys to excuse me for my English, as I am not a native speaker. I am a Portuguese speaker, as I come from Brazil. So before we go ahead to the chart, let me make a few considerations regarding the US dollar and the QE. Now, it's no secret that the dollar is poised for high ground across the board. If you have been following the USDX charts as well as Michael's latest videos, it's pretty obvious and it's pretty straightforward that the US dollar has no bearish intentions as of now. Now, I'm not telling you that the US dollar is going to go to the moon, to Mars, or anything like that, and that all other major currencies should be tossed out of the window. No, that's not what I'm telling you guys. It's just that all I'm trying to do is to complement the current QE dollar chart information with some external data, some what I consider very important external data. Uh, One interesting part of external information is that the majority of retail traders have been extremely net long on the QE dollar pair. So retail traders like us, the vast majority of them have been long, so they have been buying the QE dollar. On the other hand, the COT non-commercial net positions indicates that the New Zealand dollar have also been net short. So COT non-commercial net positions have been selling the New Zealand dollar. So what this tells us, this indicates in reality, by a matter of contrarian view, that the QE might be intended to go lower. So with this in mind, and adding the directional bias, we can probably, well, there's at least a higher probability that we should see the New Zealand dollar going to lower grounds in the near future. So let's get back to the chart and to actual price activity. The daily time frame shows us a few different interesting things. So first off, I'm gonna go ahead and add the moving averages so you guys can see the bearish bias, how apparent the downtrend directional bias really is at the moment. As you can see, the 18 EMA is above the 9. So it actually crossed right around here, and it indicates a pretty aggressive slide on the QE dollar pair. So yeah, talking about directional bias, it's pretty obvious that this pair is gonna go down. So let's get this out of the way. Okay, and let's get this out of the way and move on. So we're gonna go ahead, as ICT indicates, we're gonna go ahead and we're gonna add a few support and resistance levels uh, that will help us on our analysis regarding this pair. So let's add this one. It's gonna be rather difficult, but yeah. Oops, sorry about that. Okay, and we're gonna add this one too, because I think it is a very important support resistance level. So okay, so this is the range we're gonna be talking about in this video. We're gonna be working in this video. As you can see, it is roughly a 120.22 pip range, which is the current institutional range. and we're going to be talking about this range for the duration of this video, and actually it was the range I used to take this trade. So far we have two pieces of information, actually two very important pieces of information. Number one, we are in a very bearish market, and number two, we know the current institutional range we're going to be working with. And as expected, we can see that price dropped from the 85.30 level, from the 85 level pretty much, and it found support around the 84 level. Uh, so so actually it dropped as expected, uh, and so our bias seemed to be pretty correct and current. Let's add a third component to this equation. So as price bounced from the 84, around the 84 level, and it began to go up, the perfect scenario for another short leg could unfold as it actually did unfold. See the stop right here, right around the let me pull a line right here, right around this level right here. See this level right here? Try to make it straight. There you go. So okay, see this level right here? Let me zoom in so we can see it even better. Once this level was taken out, what happened? The market structure, the midterm market structure changed, but realistically, well, what happened was the institutional money was pushed down, or pushed it down. Institution pushed the prices down, and then it drove up. Once it drove up, it took all the buy stop orders that were sitting right around above this level, for everyone that jumped in short right around here. So everybody's screaming short, 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 and actually they placed their stops right above here. So this is great news for this move actually, because not only it took out everyone that was short, and actually institutions did this on purpose, but all the short, or the retail, or everybody that was short right here said, okay, we were short here, the market's going to go up, it's going to go up forever, it's going to go to the moon. What we're going to do, we're going to reverse our positions. We're going to buy open, we're going to open buy positions or long positions at this point right over here. And this once again is a trap by the market, and it sets up to get a twofold trade here, because they not only are gonna take the buy stop orders right over here, they are also gonna get everybody that open longs right here on shorthand. So this is the logic behind this. Uh, um, So let's add another piece to the puzzle right here. Let's add the mid and big figures to see if we have confluent levels. And as you can see, let's zoom in. The 85 level right over here becomes very important. It is a round number. Uh, it has played support and resistance a few times in the past. As you can see, it played resistance right over here, it played some resistance right over here, then it went up, it played some sort of resistance, or the area at least, for some time, then it was taken out, then it went up, then right around here is where it made some kind of support, then it dropped again. So as you can see, the 85 level is a level that is being defended by the institutions. Now, Let's identify the order block for this trade. So let's drop down to the H1 or the 1 hour time frame, and we're gonna we're gonna delineate the order block, which is right over here. And if you want to be even more specific, you can delineate it even more right over here. So this is where the institution stacked up short positions for a slide in price. Uh, and as you can see, what happened was price was driven back to this level, and then it started to drop again. Um, let's go back to the daily chart, and let's zoom in and let's check this. Let me get this out of the way. Just get this out of the way, this guy, and this guy out of the way. Okay, so let's get back to the daily chart. Okay, let's zoom in. You see this bullish candle right before the slide, the actual slide towards the 84 level. This is a very important candle according to ICT and ICT framework. And if we draw a line from around 50% of this, or halfway this candle, we're going to see that price and the market drove price exactly around that level. And by coincidence or not, this is also an important resistance level, support become resistance, that we delineated before. Adding another piece to the puzzle, let me zoom out. We dropped to the 30-minute time frame. You see these peaks right here. This one, and at last this one right here, or these. Right, so it's 1, 2, 3. 3 Indians, anyone? ICT, 3 Indians, anyone? So as you can see, the pattern of 3 Indians was also present. As you can see, I took this trade during the NY open session and NY morning session. So time-wise, it was perfect too. So I mean, this trade has had all the ingredients to be taken. So I could not refuse taking this trade. I actually missed a few pips because I didn't see, I wasn't fast enough to see all the aspects of this trade. So I gave about what, 6 pips on the entry, maybe a little more, nine pips. Yeah, I gave away 9 pips, but actually it was a rather perfect, quote unquote, perfect trade in all aspects. Um, so this is the trade I took this morning. I expect price to make another leg lower. Yeah, I'll be putting on my target later on for it. And I hope I was able to pass on my decision making process on this particular trade, and also hope you guys enjoyed. Oh, okay, I forgot about something. Let me just zoom in and show you the OTE, right? The Fibonacci extension, and as you can see, it pretty much. Let me go down to H4, like better. Okay, as you can see, price just went through to the 79 level, and it was rejected right there, proximity to the 85 level. So a lot of confluence stuff going on around here that assured me that this was I mean, a great trade, or at least a trade that I should take. So I hope I was able to pass on my decision-making process on this particular trade, and also hope you guys enjoyed. I also dearly hope that I'm correct on my analysis. Take care. I hope to be back soon with another video. Bye bye.